Hello everyone, Craig Rice, Patriots Credit Services. Today I wanted to talk to you about one single piece of the algorithm per each setting. And the reason why I like doing it this way, or going to really start doing it this way, is, well, first off, I want to make sure to get a little bit of up about me. For any readers or listeners that do not know much about me. So anyway, so what I want to do is break up the different major or five major scoring factors. FICO 2, 4, and 5, but ultimately accounts for almost all FICO, but mainly the mortgage scoring software or scores. So I want to break it up because as humans, when we take in everything at one sitting, we don't retain a lot of it. And I forget what the statistics are, but a lot of it you're not going to remember. A lot of it you're not going to take with you. My videos, I want you to save them. I want you to, go back to them. I want you to understand how it works, to take this information with you to better your future with your clients, or to reach out to us regarding any of this. But ultimately, the five major credit scoring factors is what your credit's about. Everybody sees that pie graph, but they don't understand it, or they don't know how to explain it. They don't know what goes into each individual section. So today I want to teach you about the highest credit scoring factor, which is going to be your payment history. But for now, let me break down really quickly. We got payment history, we got our debt ratio, which is going to be the balances owed. That's the second highest credit scoring factor. Average age, or age in general, is 15%. Then you got 10 and 10. So let's really get into about the payment history. Excuse me. Or how damaging late payments are, right? And how important it is to pay on time. So then after I'll let you know what some so-called credit repair organizations will do, which is a negative thing to do, and what the right way is to fix any, of a derogatory payment history. So payment history. So I'm going to just put this out here, but ultimately when it comes down to, and you could go ahead and read this, but when it comes down to it, one single 30-day late payment is so damaging to our scores. And I say ours is because it's not targeted towards one individual or a type of individual or a group. It is targeted towards us all. So one single 30-day late payment is so damaging to our scores that it takes 9 months to recover from. All right. Yes, that damaging. And what does that mean? That doesn't mean, especially when it comes to the home loan, a lot of people that I speak to, they say, so does that mean that I can't get approved for the home loan for 9 months? No, that's not accurate. What that means is it's a weight on your scores, and it doesn't relieve for 9 months after that derogatory happens. But it also means that you won't recover from how many points you lost when it landed for that amount of time. So one 30-day late payment recovery time is 9 months. A 60-day non-payment is 18 months it takes to recover from that score loss. A 90-day non-payment takes 2 years to recover from. It is very damaging and staggering to what the scores, how much they drop. So I want you to understand that it's not just a late payment. A lot of people say, oh, I just thought it was a late payment. And where's the problem start? It starts at the educational area. Nobody's out here educating as much as we should have access to. So it's important to understand that it's not just a late payment. So, and let me give you an example. Let's say that you have a late payment on any type of account. So it's not that you're going to drop more points from being late on a credit card than you are if it was an automobile or a mortgage or whatever it may be. You're just going to lose the same amount of points regardless of what type of account it is. It looks at your credit profile and it damages your scores or drops your scores to what it should drop your scores. Based on different pieces of the algorithm. But let me explain it more. For this video, for the sake of this video, let's say that it's a credit card you're late on. And you also have an automobile on your credit profile. So if you were not late, you may be increasing 5, 6, 7 points for every on-time payment, which would change monthly, but for every on-time payment, let's say that it's 6 points. And you become late. Well, your points are going to drop, right? Your scores are going to drop. But now for this next 9 months, because that recovery time frame is 9 months, now after that late payment has happened, instead of getting that same 6 points you were getting for that on-time payment with your automobile, you're now only getting 1 or 2 points. So you significantly dropped when it comes to percentage, you significantly drop the amount of points you're going to get on all your on-time payments, but not just on-time payments. So the second highest credit scoring factor, which I'm not going to get into the details of it here right now today, but what I am going to let you know is that if you pay your credit card balance down from a higher balance to a lower balance, let's say without the late payment, you would increase 60 points. Well, due to the fact of having that late payment and now paying that credit card balance down, the same amount that you paid it down as if you didn't have the late payment, you're only going to increase 20 points, 10 points, 25 points. So all because of that late payment, it affects every other place, every single piece of algorithm throughout your whole credit profile. The same thing happens with collections. If you have a collection within the last 12 months, well, when you have on-time payments over here, you're not getting as many points. When you're paying down balances, you're not getting as many points as if that derogatory wasn't there. So it's important to understand that it's not just the late payment. And it's not just, oh, well, I dropped 50 points, 60 points. A lot of people that do not have late payments over the course of 5, 10, 15, 20 plus years, they drop well over 100 points just for that single late payment. It's staggering. People are 700, 760s, 800 scores. They're dropping into the 600s and low 700s, depending again where they start off when that derogatory hits. So make sure what's some good rule of thumbs. Pay your credit card, or your accounts on time, and pay them, be well before the due date. So the sooner you pay them, the sooner it's going to report. What do I mean by that? So I mean that when you make a payment after the reporting dates, but before or by the due date, it's going to be roughly 30 days until you get those points, or that positive notation is going to be reported to the credit bureau. So it takes that long to increase the points for that positive to happen. Now, if you make your payments a minimum of 10 days before the due date, which is the reporting date, then it's going to report that month, right? So look at your calendar, look at your, and put the payments days before what the actual due date is. Have your online bill pay all of your accounts. This way, if you use their multi-million-dollar system where you bank at, have it pay every month. Your job is to stuff that bank account or multiple bank accounts with enough money to cover your monthly expenses and bills. So when you want to make sure that your job is to stuff that account and let the bill pay take care of the rest. If you structure it correctly that one time, you never have to worry about it again. So I hope this information helps. I did want to get out some information about what companies do out there that you need to watch out for. And you want to ask these credit repair organizations that if they're challenging everything negative. So what I mean by this is when you challenge a closed account that has some late payments on it, the only results you could get, or your borrower or client could get, is the account gets deleted or it's verified. So that's a very bad thing if it's deleted in many cases. And so let me give an example. Let's say that there's a borrower out there that had 3 years, 36 months of payment history, but the account is now closed. The key to this explanation is that the account is closed. So they had, say, 2 late payments out of the 36 months. Now, was that damaging? Absolutely. But did they pass the 30-day or the 90-day, which would be the 9 and 18 months recovery time frame? Most likely. The account is closed. If you challenge any dispute, direct creditor, section 603, just 623, 609, all these different ways you could actually do a direct to creditor's dispute. If they do not respond, the account gets deleted. Again, what does this mean is that if the client was paying for 36 months and they were late just 2 times, that means out of 36 months, 34 months they paid on time. So they increased more points, have age on that account, then they lost points. So if you dispute or investigate or challenge that account, what happens is you lose the good paying points on that account. So if they don't respond, which happens all the time, they don't respond to a closed account, the whole account gets deleted. There's no information on the credit report regarding that account, which means their scores are going to drop. And there's no way of putting it back on. Believe me, I know people who's contacted the president, different executives of the company. It's impossible to put back on. So you never want to take that approach. If it's closed, let the blemish be the blemish and don't go back to it. There's nothing you can do about it. Now, if the account's open, every time you make a payment, you're admitting to the past history of that opened account. So you're also admitting to the balance. Why would you pay a company or a creditor if they're reporting inaccurate, derogatory information that's not true, right? So every time you make a payment to your credit card company, your creditor, you're admitting to the past history. So when it comes to a borrower, you just want them to call. Just call and say, I'm going through a home loan process. And let them know what happened. Some people have COVID, there's deaths in families, there's job loss, there's layoffs, there's different things in all of our lives that happen pretty much every day, right? So they could use the reason and ask them, let them know, hey, I've been denied a home loan due to this late payment. Can you please help me out? In many cases they will, sometimes they don't. Sometimes it's policy. TD Bank won't do it. Many other places just won't do it. But it's always good to at least ask. What happens is you regain the points back that you lost when it landed. So if something dropped you down 50, 60, 100, 120 points, like a late payment very well can or does, you're going to get those points back. I hope this information helps. So what I'm going to do is basically tomorrow, or maybe even throughout the day if I get a few minutes, is make more videos. The next one's going to be about the second highest credit scoring factor, the balances compared to the spending limit, how it's an A through F rating. So I'll get more into details about that. If you ever have any questions, let me know. Craig Rice, Credit Craig, Patriots Credit Services. Thank you.